9th, Thursday, and just checking in with you, doing a quick morning update. I'm coming in again a little bit earlier than I typically would. I've got a meeting at 8:30 my time, so going to get this kind of morning analysis out of the way early, share some things with you from yesterday, and then I'm going to get cleaned up and get moving. So first things first, let me bring up, let's start over here. From a news perspective today, remember yesterday we had a couple of things occurring. The big one was we had Trump speaking yesterday, and the market reacted favorably to that. We'll talk about that in just a second. Today, kind of the calm before the storm of non-farm payroll tomorrow, and who knows what non-farm payroll is really going to bring. I mean, expectations are pretty good. We're reporting information from a pretty busy holiday season, so I would expect non-farm payroll to be decent, but who knows? Anybody's game. Trading non-farm payroll, obviously, just like looking at news yesterday, we want to be cautious, want to be careful. It'll happen before the live U.S. trading begins in the futures markets, but with Forex, obviously, Forex traders that are online, that's occurring after the U.S. Forex session begins. Always be careful around non-farm payroll where we can see spreads widen considerably. So while there's a lot of volatility and it's really exciting, just be aware of that and manage your expectations appropriately, manage your trades appropriately, manage your risk appropriately. For me, I've always felt like it's better to stay away until after the news occurs and then take action once the markets have returned to normal. And that'll be the same game plan for tomorrow as well. Today, what are we looking at? Let me pull this screen up over here. So same thing that we've been looking at before from a currency strength perspective. So in the Forex markets, looking at strength versus weakness. Yesterday was a good example of a divergence that occurred. What we're watching for is something like this. And this is a 1 minute, by the way. This is 1 minute currency strength, showing me how currencies are performing against one another over whatever period on a 1 minute time frame. So this is going to happen fairly quickly. This is changing considerably every tick of the market, and every minute that goes by, we see new information appearing here. But anyway, what we're watching for is divergence, kind of like what we see here, with the pound diverging from other currencies. But what you really need is a currency that's stand out on the strong side and a currency that's a standout on the weak side. That occurred yesterday. Actually, we saw that happen over here yesterday. The yen really took off to the weaker side. We had a couple of counter currencies we could look at. New Zealand and Aussie both took off to the stronger side. So pairing those together, those are standouts, right? Everything else is consolidating. All the other currencies are kind of going flat or consolidating, and then we had these that just really broke out from the others, and that gave us an opportunity to take a trade, right? We see this big move, a lot of momentum, and allowed us to take a trade and even ratchet off risk as we went along with it. So there's opportunities like that happen throughout the day. We just have to be able to be present and wait for it. Obviously, you can do a lot of things. I mean, you don't have to necessarily sit and watch a 1 minute chart. You can make those decisions in other ways. We've talked before about breakout trading. I mean, it's a super, super simple method to do, and it's a pretty low stress way to trade. And there's a lesson on that on the website if you want to go in and view it. There's in the members area, right? There's which is free. There's a really good lesson. I say really good, my opinion, a really good lesson on how to trade a breakout. Breakouts are a great way to go if you want to be able to set something up in advance and walk away and let the trade do what it's going to do. I hate that term, set it and forget it, but I mean, it's really true. You can look at when something gets into a range, you can look at different levels to trade from and set your entry point. If it breaks through this, I want to go into the trade. Set your stop loss and figure out how you're going to trade that instrument, how you're going to manage your risk, and then how you're going to do risk management once you're into that trade, and where you're going to take profit. It's a super low key, easy way to go, low stress way to go. So anyway, if you don't want to sit and watch a chart, if you're present and you can have time watching a chart, then obviously, looking at that real-time data, waiting for the currencies to move, waiting for something to really break out, it gives you an opportunity to find out which currencies are moving and pair those together. I had this written based on a currency strength indicator for a previous company I worked for. I had that the math done inside of TradingView, and I'm actually working to have another full dashboard built for myself, but I want to have it all be information that's relevant to what I really want to see in the marketplace, and I'll share that with you guys once it's ready. But ultimately, what this is telling me, it's allowing me to see which currencies are moving, and that allows me to make a decision of what I want to pair together. I'm going to port this same concept over to crypto as well, because it's the same thing. Crypto is obviously a very speculative market. It's not utilitarian like the Forex is, but you have pairings of currencies, of cryptocurrencies, and the same principles apply there, right? Finding two that actually have momentum at the time and pairing those together is going to give you a better result than just blindly trading the same pair over and over and over. So anyway, that's where that is. Over here on the futures market, we talked yesterday about levels here on the ES. Today, we continue that upward move. As I said yesterday, we're in an upward trend on the ES. In my opinion, and again, I'm just some guy on the internet, I'm not telling you what to do. In my opinion, I feel like buying pullbacks is the way to go. The market's still pushing up. I know, again, as I mentioned yesterday, a lot of people have been saying we're at the top. But remember, people have been calling the top since it was at 2,000 3 years ago. It's not going to stay above 2,000. It's going to retrace. Yeah, well, if you want to be contrarian and go against the trend, how did that work out for you? You stick with it. Stick with the trend. It's what it's doing, right? It's moving up. So I feel like, the best thing to do is look for key levels and continue buying pullbacks. Obviously, it's fine to look at top edges and look to trade down off of a top edge. You're not stuck into any one way or the other, but we talked again just about simplicity and looking at the easy, simple things that we can do to give ourselves a slight edge. Trading with the trend has proven to be something that gives you a little bit of an edge, and if you look for key areas in a speculative market like futures, right, which is a solely speculative market, we're able to look for areas that we could buy or sell from with the direction of the trend. Now, that's not to say that, hey, if we got a top edge at 32.75 or key number at 32.75, it's a great whole number, sure, sell from it. But keep your stops tight. Be prepared that it might break through there. Yesterday we had a pullback prior to Mr. Trump speaking, and then as soon as he wrapped up, the market pushed right on through a key level. That key level was like this 32.44, 32.45 area. Pushed right on through it, blew right through it, but it came back once it pushed through and gave other opportunities to get in there again. If you're looking at a 30-minute, looking for that break, close above, and then a retest. Remember, one of the things that we've talked about early on is when you're looking at support and resistance trading, what was resistance, once it's broken, becomes support. So very often, if you look at those key levels, when something breaks through a resistance point, price may come back to that point as support and then move on again, right? Again, there's nothing in the marketplace that's a definitive is going to work 100% of the time. There's nothing like that. No matter what anyone wants to tell you, it's still a random market. Every market is a random market. Some markets more random than others, obviously. Forex is one of those. It's a very different bear from the equities market, futures market. Very, 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 very different bear. Traded in a different way. But anyway, back over here with futures. So looking at those key areas, looking for potential pullbacks and keep looking long as far as I'm concerned. But again, don't limit yourself to any one direction. If you see key areas where price is struggling, look for that as an opportunity to sell that top edge. So just depends on what your level of risk is and what you're looking to do. Again, talking about breakouts, look for a fairly active instrument and look for areas where it's consolidated and use that as your breakout point. You're never going to catch the actual, very bottom or very top, but if you're looking for breakouts, you're looking for something to show some movement in a certain direction beyond a range that has been trapped in. So breakout is awesome for that. So a lot of different ways you can approach it. This area coming back here to a 4 hour, 32.44 was broken, and we broke the previous high, which was this 32.60 area right here. So maybe price floats back down 32.60, and that's an opportunity to buy from there. Maybe we stay in a range. I don't know. No one knows what's going to happen. No one knows the future. No one can predict 100% of the time what's going to happen next. We just have to have a plan, and that plan should be unique to every one of us. My plan isn't your plan, and your plan isn't Bob's plan, and Bob's plan isn't Marsha's plan, and so on and so forth. We should all have something that's unique based on our risk tolerance, because that's different for all of us, right? We all have a different mindset for risk based on our risk tolerance, based on our opinions about what we think is going to happen and how we want to manage that risk and where we're comfortable trading from. Some people are very comfortable trading top edge, bottom edge, looking for bounces as opposed to breaks, right? Looking at support resistance, you can play bounces within those as opposed to support resistance looking for breakouts from there. So everyone's got their own plan. I'm certainly not telling you what plan you should have. I want you to develop your own plan based on mathematical probabilities and based on things that statistically give you that edge over the long term, which is limiting your risk, looking at profit-taking potential, that's 2 to 3 times where your initial risk was. We're getting a real push on the pound yen, by the way, right now. We should pop over and have a look at that here. Pound versus the yen, super bit of divergence here. Pound really showing a push to the strong side. Yen pushing very significantly here to the weak side. There's no news happening right now. Wrong one. No. No. There's no news that just came out that would be impacting that. So that's a interesting move there. And really, if we look at the last 4 hours, the pound has been moving to strength. What does that look like on a chart? Let's see, pound yen. Let's move this over here. So yeah, so we're seeing a really big move with that pound versus the yen. Looks like nice divergence, and speaking of, if you're looking at a channel, it's really broken out of that as well. So some super opportunity there using currency strength to give us an indication of a currency pairing that we might want to put together and trade. It's also a pretty volatile currency pairing, pound yen. Pound yen typically has a fairly large range. Let's just have a look at what that range is currently over here on this one. Take that off. Pound yen. Yeah, so pound yen, average is about 130 over the last 30 days, 137 pip on average. Today it's moved 100, so no matter which way you slice it, it's got some, quote, gas in the tank, meaning that there's still a lot of potential for movement to continue there. So certainly an interesting pairing. We'll see how that shapes out as time goes on. So that's that pound versus the yen. We're seeing that divergence right here on the currency strength individual charts. So anyway, what was I talking about? I was on some soapbox about trading plans, but it's really what it comes down to is don't try to duplicate somebody else's plan exactly, right? You're not them. We're all gonna have. It's the exact reason that you can have a robot. Like a robot everybody can be taking the same damn trade off a robot. Some people will be successful, some people won't. It's because they start interfering with what the robot does. The best way to approach a market is to figure out what you want out of trading, what market is best for you, what you want out of trading, what your risk tolerance is, how you want to approach the market. Are you a contrarian, meaning that you constantly want to sell the top edge and or buy the bottom edge and try to squeeze the most out of every move that's possible? Or are you someone that wants to kind of go with the flow and only trade momentum trades that have pushed through a certain level that you've identified in advance, and so on and so forth? You want to trade only in the Forex and measure currency strength and make your trading decisions based on momentum that's occurring with individual currencies. I mean, it's just stuff you have to think through in order to figure out what your trading plan is. And I've got some more lessons coming to the members area that's going to address all of that. Like I mentioned yesterday, trading is my main thing, right? We've got some cool stuff that helps you generate income if you don't have disposable trading capital. Proven stuff that actually I do, that's on the make it side of the thing. But grow it is where my focus is now. I'm not looking to make that disposable income. I'm looking to do it through trading, and I have a lot to share with you in that realm, but I've got to put it in my own words. I've always been the guy in the background behind other people, providing that support and teaching, but I've got to put everything into my own words and get it out there for you. So that's coming over the next bit. So be sure to stick around, subscribe to YouTube, to follow me on Facebook. You'll get the daily updates like I'm doing now, but you'll also be notified when additional training modules come out on that site. So anyway, I've gone way longer than I wanted to go. I have a tendency to just talk because I like to talk, and I like to teach, and I like to talk about the markets. It's cool stuff that's always going on out here, and it's something that is a constant learning experience that teaches us a lot about our mentality, what drives us. We learn a lot about our I don't know what word I'm looking for, but those key little triggers. You learn a lot about yourself as long as you're open to that external feedback that the market can give to you. If you're open to looking internally and accepting some maybe ugly truths about yourself, but once you accept those, understand them, then you can start making a plan that works within those confines of what your triggers are and what things you're trying to accomplish, and so on and so forth. So anyway, that's it for now. To recap real quickly, currency strength, we just saw a big move here on the pound yen. No one knows if that's going to continue. This triggered us to say, hey, we've got activity. We've got something happening. This pound is moving. This yen is moving right now. There's something going on there. But again, we don't know if that's going to continue. Use it for what it is. It's a real-time analysis that tells us that activity is happening, right? Certainly in the marketplace, there is quite a bit left in that pairings range. We talked about the E-minis. I didn't go into gold or crude, but they're kind of at the same things going on here. Looking at gold and crude. Crude has kind of turned back to the short side here. So, crude, if it floats up to 60, opportunities maybe to sell that here for the short term. We'll But again, be prepared to be wrong. We're going to be wrong our trades are going to go against us. It will happen. You will never be right 100% of the time. So be prepared to be wrong, cut the losses, and move on, right? But anyway, so looking for pullbacks over here on ES to continue this parabolic move that has been making over the last couple of years. Gold still, looking for pullbacks. It's kind of odd. We're in an odd situation where gold is up, crude is actually up, and E-minis are up. S&P is up, NASDAQ's up. Kind of an odd situation. Everything is going the same direction, but stick with the trend until it's no longer the trend, and then go the opposite direction. So that's it for now. Have a great day. We'll talk